What's going on, everyone? Explaining inverse fair value gaps. I just have to say that I spent 15 minutes of my life recording this video, and then this didn't save. Actual misery. Just wanted to put that out there. This is the video.
If the 1 hour
Literally
we
nothing.
close below it,
Wow. Okay. Regardless, just wanted to express my sorrow. But you guys learned what fair value gaps were. Fair value gaps is a 3 candlestick pattern, pretty much just resembling a imbalance of buyers to sellers or sellers to buyers in a specific area. Again, if I had to paint it for you, draw it for you, whatever. Right, we have the small candle, then we have like a big candle, we have another candle, and then let's say we have wicks here. And what do you have? You have an imbalance from the top of the third wick and then the bottom of the first wick. This here is a fair value gap representing more buy side power, more buyers than sellers in this area. So what does price like to do? It likes to tap and then continue higher. However, what does it mean if, let's say we have another candle, and let's say we close beneath this? Well, I thought this was a lot of buyers, bro. Why are we closing beneath it? Why is there more sellers now? That's what we call inverse fair value gap. Boom. So an area where there were originally buyers or sellers is now controlled by an area of either, regardless, so swapping it, sellers or buyers. Okay, so what does that mean actually in the markets? I'm not going to spend too much time drawing it for you, but I'll show you guys an idea. All right, so well, we see this fair value gap from here to here. Okay, and then right, we can mark it out, and then we see that it taps into it, and we're like, all right, cool. So shorts? No, we close above it. Well, what does that represent? That just means that in this area here where there was originally sellers, there are now more buyers. So this area, this momentum, this part of the chart is like is owned, not owned, but like there's more buyers, right? So I hope you guys get my point, but it just basically means that more people are buying in this area. There's more support than resistance, if you guys understand that better. Now, it is very important for me to say it does not matter. So you guys can see this right here, okay? Or I'll just show you as a great example. Hold on. No. All right. For example, regardless, forget it. So in this fair value gap, we see that price closes above it with this candle here. Okay, let's say instead of on the 30-minute, you're looking on the 15-minute time frame, and you're like, well, Mish, price right here, close. That is unregardless to us. Why? Because the fair value gap that we're looking at is on the 30-minute chart. If we are looking at a fair value gap on the 30-minute chart, we want to see a 30-minute candle close above that fair value gap, because reason being is if we are going to look at an imbalance and say that there's more sellers to buyers here, this is only on the 30-minute time frame. On the 1 hour time frame, yes, there still is, but it may not be. Not all times there is. So it just represents an imbalance on the 30-minute time frame. Now, the 30-minute time frame can only get inversed by a 30-minute candle, okay? So that's something you guys have to learn, okay? So let's say yeah, perfect example. All right. Okay, so we see this fair value gap here to here, and then we see price. Okay, did this fair value gap get inversed? Give me 3 seconds. What do we think? No. The answer is no, is because yes, we do go above this fair value gap, but we don't get a closure. Okay, difference between this one and this one is that, let's say in this one, right? We see with this candle here, this one here, so you guys see it, we see how the bottom closes beneath this bullish fair value gap. And in this bullish fair value gap here, the top of this bearish fair value gap needs to get closed above to inverse it, right? To prove that there's more buyers than sellers in this area. That doesn't happen. Just because we wick the fair value gap and we go through it doesn't mean that it's invalidated, okay? It doesn't mean that it's invalidated because we didn't close with stronger buying power, okay? We closed and sellers were still in control in this area, all right? So it's important for me to say that's why you don't want to put, like, let's say you're taking a short here for whatever reason, right? Not even looking at it. I'm just not saying that this is a good trade. But let's say that you take this short and you put your stop loss at the top of this fair value gap. And you're like, well, cool, bro. Like, we have the fair value gap. It should hold. Like, it's going to send me lower. I'm going to target whatever, okay? Let's just say you're targeting this. This doesn't disprove the fair value gap, okay? And that's why you have to be really, really careful about where you put your stop losses. This is why I never, ever, ever put my stop loss on top or on the bottom of a fair value gap, because again, it could just get wicked through and then respected and then still continue downwards. Okay, that's not my intention. I want to get stopped out when the move is no longer happening, when my bias is incorrect. And I'm gonna get more into stop loss and TP, like take profit placements later. But just for the identity of this video, you obviously want to like exit when your move, when your bias, when you, what we think has been proven wrong. Just because you put your stop loss here doesn't mean you've been proven wrong. You're still correct. Price did still continue downwards. You just got unlucky because you didn't know where to put your stop, and it's on you. Okay, so never ever put stop loss between above a bearish fair value gap or below a bullish fair value gap. All right. So, well, okay. So let's say for a fair value gap, right? We're looking for a retracement, meaning that if we have a fair value gap, we want to see price come back into that fair value. Let's say this is a fair. Let's just say this is our fair value gap from here to here. Okay, we have the 3 candles. Boom, boom, and then boom, boom. Okay, this is our fair value from here to here, and we see price come back in, and then we expect it to continue higher. Let's say we close beneath it. Are we expecting price to come back in here and then continue lower? Answer is probably not. Okay, that might sound like a shocker to some of you, but it's not. It's mostly used for, I just forgot how to talk. Great. It's mostly used for being able to identify a switch in chart momentum or in biases. Okay, so that's why a lot of people, us included, right, on the red blueprint, you're looking for a lower time frame inverse fair value gap. All that basically means is that on the lower time frames we're switching, because usually, right, when you're seeing like a move like this and you're seeing that we're going up and then we all of a sudden drop, right, when you look at a move like this, you go to the 5-minute time frame, promise you there's an inverse fair value gap somewhere there. I promise. What do we see? Right? Maybe not. Okay, I was wrong. Let's go to the 3-minute. I promise you there was a low. Right? We have still. Oh my God, nothing. We'll go on the 1-minute. Right? There's always a change on the lower time frames before on the bigger time frames, and that's why you want to catch the move. Okay. So, again, you see a bullish fair value gap from here to here. What do we see? We close beneath it with this candle here, and you're like, cool, perfect. Then you take your short, you wait for that, then you take your short, you put it at this high, and then you target. What do you target? Draws on liquidity. Okay, now we're putting the pieces together, right? Now we're putting the pieces together. Draws on liquidity in this case would be like this low. Boom, perfect setup. You take your dub, whatever. Okay, do you guys see this? Because right, this is your setup. Okay, now I'm just gonna mark out some fair value gaps for you guys, or inverse fair value gaps for you guys, just to show you what they represent. Now this here, 1, 2, 3 candlestick pattern doesn't get inversed because we don't close above it. Okay, so could a fair value gap get tapped into and then inversed? Absolutely yes. All right, just like in this case, right? We have this bullish fair value gap. We tap into it. We don't inverse it. We don't inverse it yet, and then we still don't inverse it here. But with this candle, we inverse it. Reason being, again, we close beneath this bullish fair value gap, representing that here is more sellers than buyers. Okay. Now I'm gonna actually show you guys some examples, not like test you. All right. Boom, boom. We close beneath or below. Boom, boom. We close below. Now let's look at some bearish ones. Boom, boom. We close above. Okay. Boom, boom. We close above. Boom, boom. We close above. All right. Simple. Not very hard. All right. I'm just gonna speed run some for you guys so you guys can actually see. Again, 3 candlestick pattern. It doesn't matter if the first or third candle are bearish and then the middle one is bullish. It still counts as a fair value gap, right? We're seeing this. Boom, boom, close above. Boom, boom, close above. All right. So let's say here, For whatever reason, you think that price is gonna go up, and you're like, all right, I want to see an inverse fair value gap, and I want to see it, and I want to enter it. But what time frame am I looking at, right? The 1 hour school. Let's just say we're trading on it for whatever reason, right? But you're like, I have two fair value gaps here. Which one do I want to get inversed? Because Mish said that the fair value gap needs to get inversed to prove that there's buying power. So should I wait and enter off of this candle that proved that this fair value gap was no longer valid, or do I wait one more to inverse this? Now I'm gonna answer your question, Timmy, right? Timmy, but you're always going to wait for the higher. You're gonna wait for the higher fair value gap in this case, or the so if it's bearish, you're gonna wait for the higher one, or if it's bullish, you're gonna wait for the lower one. Again, it's going to be just because this still represents an area of sellers. Price could inverse this move through this area, come here, and then continue lower. We don't want that happening. We want to enter when we are completely sure that price has inversed any areas of buying or selling power so that we can actually move up. So this inverse means nothing to us because we have this bearish fair value gap above. Now, once this gets inversed, sure, you can enter here. You can enter targeting whatever you want to target, but it's gonna look something like this, okay? Other than that, it's not very difficult. I feel like it's pretty simple. As long as you're looking, you know what a fair value gap is, and as long as you realize that it has to get inversed on the same time frame, and it has to close above or below, right? So if it's bullish, close below, just because, right? So think about it like this. If you gotta invalidate something, bullish means up. If you invalidate it, means you close down. Okay, same thing. Like you inverse it and vice versa. So bearish, you're moving down. If you inverse it, meaning you disprove it, you're going up. Okay, simple, simple, simple. All you gotta do is like learn it. Once you learn it, it kind of sticks in your head. But again, right? Let's say this is not an inverse fair value gap because we never closed above it. That's pretty much it. There's nothing else. Like right, this would not count as an inverse fair value gap because we still close like barely in this area, and then finally we inverse it with this candle. Okay, so that's pretty much it. Not a lot more to talk about. Don't want to waste you guys' time like this. But once you find it, so I recommend what you guys want to actually do is go on the charts, go on TradingView, and actually find to start marking out fair value gaps, and then ask yourself, did it inverse or did it not inverse? Okay, and then I want you to find 5 fair value gaps. I want you to find 5 inverse fair value gaps, and I want you to find like 3 fair value gaps like this where they got wicked into, and then be like, this is not an inverse fair value gap, just so you can actually distinguish which one is which and see that like difference. All right, that's pretty much it. Yeah, I'm not gonna hold you guys any longer here. Still mad I had to record this video, but still putting some good work. Catch y'all boys later.